Good afternoon. This is Chris Brecher with a Simpler Stocks free video for March 7th, 2016. It's about 4:07 p.m., about 7 minutes after the bell. Today was all about the unemployment report coming out better than expected. And just so you know, we have the ES is up all of 5, NASDAQ up only 3. It was up a lot more. You had the bonds down a point on the better expected numbers. You had transports up 49. You had crude oil up $1.64. Showing some inflation in the system, and you had gold up $4, really selling off from its high. So what was today all about? Today was about people knowing things before it happened. What do I mean by that? Check out gold yesterday, and check out the rally that we got yesterday. Okay, so look at this on Thursday, and then boom, you get this rally from 1200 to 1240 on gold. So somebody knew that the report was going to be a little better than expected. When we do the Simpler Stocks, the premium chat before the opening, I'm on from 8 to 9 Eastern. So I'm actually on when the unemployment report comes out at 8:30. Last month, I sort of gamed it perfect. I said the non-farm payrolls would be 157. I was like almost exactly right. Today, the expectation was like 195 to 200. When I saw this gold, and I saw it up this morning, I told everybody I thought it would be around 211 or better than that because there were just little tells. So what were the little tells? You had gold rallying. You also had this. You had Caterpillar rallying in here the last week, just going crazy from 64 to 74. So the whole idea is economically sensitive stocks were kicking in, indicating a better economy than you expect. And sure enough, they went, it was a better unemployment report than you expect. Now, you would say in this, aren't bonds going to get trashed? Well, let me just show you something about inflation in the system. Here's the bonds on the left. So I'm going to take off the indexes so you could just see what I'm talking about. Here's the bonds on the left having this reversal that day. Now I want to show you on the right, I want to show you some little things that are concerning. Look at the LBS. This is lumber. Lumber has now gone up $22 in a week. Unbelievable. There's starting to be some inflation in the system. Let me show you what I mean by that. Let me get up my slides and show you exactly what I mean. This is the DBA. So this is my Snagit editor. Copy this from Twitter. That's the DBA, which is the commodity index, an ETF. It doesn't show well on Thinkorswim's show, so I thought I'd show it this way. It has sugar, live cattle, corn, soybeans, and so on. Look at the low right there, February 10th. So obviously long bonds are adversely affected by inflation. Check out the low in the DBA was February 10th. Notice when the high with bonds are, February 10th. So don't underestimate the power of inflation or all of a sudden changing the philosophy of traders to worry about it. That's all you need to get a nice little bond sell-off. Now, so you saw the sell-off today with the bonds, and you saw it just a little with the unemployment. You see it going up yesterday in anticipation that bonds didn't really show me much. And then watch what happens today. They just fall apart right here. And that's because of this inflationary expectations, no doubt about it. Put this on a 195 and you can see what I'm talking about. Right here, just falling apart. And does this mean another leg down? It could. No doubt about it. So that's one thing I'm watching in here. Now, the market today, and this is where I hope, and I don't mean this cocky at all, but that you need someone with a lot of experience if you're intraday trading. And this is going to be in my day trading class that I'm having March 17th, is I watch a number of indicators. And I can show you the advanced decline. Like I have 6 screens up. One of the screens I have this. I have the Russell. I have the NASDAQ. I have the ESs. I have all these indicators, and we have free classes that show how to use them. Then I've had an expensive class that showed exactly how to use those and combined them all. I have the advanced decline. I have the volatility. I have oil, bonds, the yen, and these are my 8 charts that I watch all the time. One thing that I watch a lot is the volatility index. And today, when the market was going to new highs, this UVXY wouldn't go down. That was one of the tells. So I always look for tells. What was another tell in here? You'll like this one. Usually when a market gets up to resistance like this, like it is, you usually get some warning signs. This was the warning sign I saw in here. We have been talking for 2 weeks about buying Russell stocks because the Russell had underperformed the ESs. And what I mean by that is put a daily, and you can see that this wasn't anywhere close to here when the ESs already were. Well, when the Russells are composed of a lot of speculative stocks. Check out what some of these speculative stocks did today. What I usually do is I look at FinViz. It's just a quick way to look at it. And I want you to see what were the biggest stocks today. Forget about these ads up here. What were the biggest movers? The Slop, SDRL, up 131%. DNR, up 52%. CATB, in 2 days, up $2. And so on. Check this out. When you see the Slop going up, that's usually a sign of a frothy market intermediate term. I don't mean we have to go straight down, but that's something you have to keep in mind in here when you see like these excesses. And so when I saw that, number one, I told people to buy the Russell, some stocks within the Russell weeks ago. And what happened is they cascade. So first you go through the Apples and the Googles and the Amazons go up. Then the second tier go up like the Caterpillars of the world and the Macy's. So you have Caterpillar here on a daily. You have Macy's on a daily. And you get these big old moves. You get even SAFE and Airline straight up. What happens is it filters down. All of a sudden you go for the Sprouts Farmers Market. They start kicking in. All of a sudden people are like, what hasn't gone up yet? And that's when they start going for the garbage. They go for the Weatherfords of the world. They go for RIG. Check out RIG today. There you go. $8 to $13 in 4 days. That's what I mean. They're going for the slop. And usually that's a big warning sign. So I just wanted to show you how I do that. Other thing I wanted to show you, and usually the free video is only about 7 minutes, but I want to show you what we talk about. And like I said, I'm going to mention in the day trading class, and we talk about before the opening all the time. Here's Caterpillar today. Now, Caterpillar has had this exceptional run, and I'm trying to teach people when to jump in and when not to. If you said this is overdone, I want to short it, you have to look at it only on an ultra short-term time frame. Why do I say that? Even on a 78, it hasn't gotten under any of the moving averages I look at. But if you want to trade it intraday, that's a different story. What do I mean by that? We know Caterpillar's extended. I mean, you can see that a mile away. Look at the ESs on the left. I'm going to put it on a 2-minute chart. Forget about the sell-off. I'm going to show you prior to the sell-off. Now, put on Caterpillar in 2-minute chart. Forget about the sell-off. I'm going to show you prior to that. The whole idea in here is this. When the market sold off this morning, Caterpillar had a little sell-off, but it was oversold then in an uptrend. The second it broke that ATR trailing stop, it was off to the races. It was outperforming the whole market. Now, you see the market here consolidate right in this area between 11 o'clock and 12:30. In that consolidation, this was still going up. But this is the big tell. Look at the next leg of the ESs breaking out of this pattern, but Caterpillar refusing to go any farther up. If you were watching Caterpillar, what I do is I probably have 20 stocks all on one screen. And I'm watching when the market's going up to see if something all of a sudden isn't acting the same as it acted before. So what I did today, I actually had a butterfly that I recommend on simpler options that was a disaster. I know it's a butterfly in Caterpillar. I know it's pretty cute, but it was a disaster. But to adjust the trade, I bought 200 shares right there. Right here where it crossed the ATR the first time, I sold 200. So right there, I made back $250. Second thing I did is I'm watch it on a 2-minute, and it's easier to see at a 5 so you don't have false signals. And I saw this cross right here, and I shorted 200 right here, right on the cross. I bought 200 back here. Why there? Because that's where it stopped earlier today, and it was close to the end of the day. So now I made back another 1.5 on 200 shares. So now I've made $500 back that sort of made up for some of the horrible trade I did on the butterfly. The whole idea in here is if you're ultra short-term trading, you have to watch these closely. The other thing to watch in here is when this stopped going up. So this was a little bit of a trigger, but notice the ESs on the left, they stopped going up. So when this crossed, this was already weak and that crossed. So that's how I did a day trade in there, and I thought you'd want to see that. So everybody, you know we have a $7 30-day trial. In the premium chat before the opening, I'm on from 8 to 9. We go over strategies like this. A lot of times we have free classes every week where we go over these, and then I post in the forum all day of different strategies. So I hope you can take advantage of the offer. Everybody have a great weekend, and I will talk to you Monday.